Hey guys, happy Sunday evening. Ed here. This is going to be an internal video. I'm just going to go back through the ES chart that I did for everyone. It's in front of you. I'm going to talk through. First and foremost, though, guys, hearts and prayers go out to Lil B and his family. Suffered a massive tragedy this morning, this weekend, and he might be jumping in. But just guys, if you'll keep him and his family in prayers, he would greatly appreciate it. And you know, certainly life comes well before the market. So that said, I'm going to go to a 4-hour chart on ES. I have everybody has the trend lines that I drew earlier. Um, Everything's going back to August. If we go back to the August top, the fibs on the right are from the August top. The fibs on the left colored are from the October top. The low is coming off the low of year from COVID lows, and the top area is coming down from high year all-time highs through August highs. Okay, and they intersect, and we talked about that last week. I drew a vertical line here. Um, November 3rd, it goes to the 4th when we scale down, so don't let that freak you out. That's why the circles are off just a little bit. Where the November 4th intersects these trend lines are kind of important levels. Guys, I had no idea about this chart when I went through and did the clustering on ES, and that being the PVI for ES. And then further, you got the 786 right up here, just underneath the ES PVI. The 618, if we get through the point 0.5, which is where we just above where we finished Friday, you could expect it to go back to the 618. And so we're looking for this zone to trade. This would be a good area to take profits on longs, stop and reverse. Any rejection in this box, to me, any rejection in here is going to drive us back down. I've got the weekly pivot here in the blue line. It's kind of the over under for the week. Not shown right now or supply demand, but I got a surprise for y'all. The other comes from the August high, going back through this zone. This was the key. Um, this was the key supply zone that we rejected here on the 5th of October, and then it was also the key area that flipped into breaking out of that trend line, flipped into kind of a buy zone, and so we're above that trend line, and now we're working on this trend line. And again, trend line August high to September high, and just looking at where they are. So explaining is we're currently in a supply zone, and we currently have a demand zone from the last, really going back to the 27th September. So the last 4 weeks, we've had a demand zone and we've had a supply zone up here. In the event that we get price action above this area and acceptance between the point 0.5 and the 618, in the event that we go that's going to almost disable this supply zone, and this is going to become our new supply zone, and with it, this is going to become our new demand zone. Okay, until price acceptance above here and we break that trend line and we get up here in the 618 and we start to find balance up here. If that happens, then our demand and supply will both move up simultaneously. They're not the same distance apart. That stuff doesn't matter. We're just looking at gaps in areas where the market is likely to find balance in a certain price structure. And again, if you've got all these levels and you're a market profile expert, I am not. I have it, but I'm not an expert at it. I use the market profile to confirm this stuff. Other people use the market profile as their primary, and they use this stuff, trend lines, these zones, Fibonacci's. They use that to confirm market profile. Find your fit, guys. Whatever works for you, that's how you trade. So in the event that we do fail down here and we get below the weekly pivot, you'll see this in a little bit. I'm getting ready to give you all a treat, a snapshot of what's gonna become kind of a future for a lot of you guys trading, and I'm super excited about it because it's going to give you weeklies. So I'm gonna go up here on mine. You guys won't have this yet. Don't worry about the old. The old is and I've got to scale down so we get rid of all the old. There's no way to get rid of it on TradingView, which is, it bothers me. But the beauty is that we now are at a spot. Let me see if I can go 15 minutes. Nope, I need to go 5 minutes. We now are at a spot, boys and girls, where you have, for the week, you have targets. Okay, supply demand for the entire week. If you don't believe me, I'm going to pull up the ones that you guys have right here. And this is what tomorrow looks like. You see how tight they are? Buy target 5 is right here. Take that one off. Buy target 2 is where for the week is where buy target 5 is. Now, where this is going to become important for all of us is we start looking that buy target 3, then we've got a fib, the 786 fib. Then we got ES's PVI. Then we've got, this is that trend line coming down. I know it looks lateral because we're on a 5-minute instead of a 4-hour or a daily. Okay. This concept, in the event that we get down below the weekly demand this week is over the weekly pivot. In the event that we fall below one of these two, your tendency for the day, for the following day, will be to play the downside. You want to be short underneath demand or the weekly pivot, whichever is lower, and you want to be long above the weekly pivot or supply, whichever's higher. And weekly supply comes in this week on ES at basically 39.50. So from 39.50, where are we going to? 4,000. Why? Because that's the next fib level. That's the 618 fib level. So I'm super excited about it. The reason why is in the event that if and when we sell, let's just use this as if it's SPX, and we're going to sell, let's go green. We're going to sell PVI up here. Well, then you work down, and guys, you know this right now, that if our levels are up there and we go over here and somewhere between buy target 2 and R3, somewhere between here, we're going to start putting on hedges. And so we might very well hedge at R2, 20%. Buy target 2, hedge another 20%. R3, our final hedge. So we would put on 20, 40, 60, with the understanding is that in the event that the market starts coming back down to this level, we take off all of our hedges. And you take profit on whatever you hedge from R2 up to buy target 2. And I'll kind of work guys through that. But all I wanted to do by showing you guys this weekly, these lines are going to go the entire week. R3 will not change. R3 will not change. And it's at 40.98.50 the entire week. The beauty is when we can roll this script out, it'll probably be Tuesday night, the night of the 1st, or Wednesday morning. But when we can roll this out, you guys are going to have this script. And this script is going to work for every stinking indicator and symbol you look at, so that you can go in and create zones, and you can have PWG levels. They're a little modified than the intraday levels. The intraday levels are up to 15 minutes. These are going to work up to I think daily time frames from 1 hour up to daily, and allow you to go further back. More importantly is that we're going to be able to see statistically, and we're running right now, we're running modules and back testing. If we break R2, what's the probability from R2 to buy target 2 on an intraday level as well as on a weekly level? What's the probabilities from R3 to buy target 3, so that you guys can understand, wait a minute, the levels, if us getting up here is only 70%, then I need to take that into consideration for my hedge. And if R3 to buy target 3 is only 62%, then I need to take that into consideration for my hedge. Again, we have stats on PVI stuff. It's really running, the standard PVI is running about 95% over the last 22 years of a win rate. Not a breach. Now, we haven't run it, but we have started doing back testing all the way back to the 1970s. when they first started Monte Carlo simulation. And what we've done is I've taken out the baseline code for PVI, and we're using that to run levels, and we're using that to run back tests, and we're using that so that when you guys put on a PVI, sell an iron condor or sell a PCS or a CCS, you're gonna be able to do that with a 92% certainty that you're gonna have a win rate. And so then what you're doing is you're hedging against the 8% where you're wrong. And so we'll have breach statistics and closing outside the range statistics for everybody. But more importantly, I wanted to get these levels to you guys, and this is what it'll look like. The exact same levels as our PWG, and it's been a pain in the ass to program them, but we've been working on them. And so you would have it the entire week. So if we go back to last week, and I might need to go a 15-minute chart for last week. But you can see here, and I don't remember what the weekly pivot was last week, but you can see right here. Remember we talked about we never fell in the demand zone. We never fell below demand zone for the entire week. Once you clear above the supply zone, above the white line, the upper white line, you go long. You play long every day that we're trading and opening above that line for the entire week. And so if you go back and you go all the way back to last Sunday when it first opened at 1800 and you draw that line, you just say, you know what, if we're above 37.98, if we're above 3800, I'm long. If we're below 37.32, 37.35, if we're below this zone for the week, I'm playing short. Okay? And so what happened was, Sunday night, and then we crack in. Monday, I think we opened right here Monday. So spiked up, came back down, shot up. Tuesday, trend up day. Wednesday, the open right here, trend up, run right into a level. Literally ran right into a level. We top wicked it. Everybody remembers that was supply zone. I shorted it. We took a short. We gave it all back. We retraced 100% of it, and then we closed higher at the end of the day. Thursday, we trended down. And then after hours was the huge spike down. Got back above this level. Again, you can use these levels. Look at how well we held the buy trigger. At 3:45 in the morning, 3:45 Eastern time, Friday morning, we held the buy trigger. And so you're going to get to a spot where you guys, just like the PWG levels, you're going to play level to level, level to level, level to level. Well, above this level, you just know for the week, if we're above the white zone for the week, you're offsides if you're shorting. Now, are there intraday shorts? Absolutely. Can we have a trend down day when we're above this level? Absolutely. We had one Thursday, right? 9:30, we open, down, back up, we peaked, hit a top. This is where we took a bunch of shorts. And then we hit trend down day for the whole afternoon. We're still above the supply zone, right? We're still above sellers, okay? And at which point this breaches, now support becomes resistance, and we're underneath it, and then we held it, and it comes right back to it, and it gives us an opportunity. So I'm super excited about these levels as this week plays out. You're going to get more and more. Where are we right now? We're right now at the 0.50 fib, and that's why we're holding right at 39.05, and that's exactly where the Fibonacci is, at 39.05.25, and you see how tight price action is. That's why I'm not trading tonight. Again, I scalped short. I actually think I went short right here, somewhere in 11.50, and I covered at the opening, swoosh down. And now it's going to be, waiting for Asia. So, guys, quick video, 13 minutes. But I hope it helps. And again, I'm excited about everybody starting to do some homework, starting to find their own supply and demand zones, starting to think for themselves, drawing Fibonacci, retracement tools, looking at supply and demand, looking at your weekly pivot, setting your plan up for the week, and most important, gaining a lot of confidence in the data and the metrics that we're using, and how you can use it to benefit yourself. So again, thoughts and prayers, Little B. Love you, guy. We're praying for you if you watch this. And for everybody else, man, have a great night. Let's play safe and let's get ready to make some money this week. All right, later, bye.